Hey everybody, welcome back. Nasdaq hits new highs. First, we're going to talk about the ES, what's going on here. When you start to see these patterns, you really want to pay attention, and I'm just going to show you exactly what I mean. We're going to get pretty technical tonight with a lot of these levels. I think the most important thing that we can do right now, candidly, is get technical, because this week is really going to be based upon that. And of course, you have the macro. But I thought this was kind of interesting. If you take this bar and this breakout bar and you measure it, it takes you right to the high right here. So again, if you just take this breakout bar and then you measure it right to the top of this bar and to the low, it takes you right to that level. I thought that was pretty interesting. So 47.32 holds a pretty key level that we should pay attention to in any pullbacks. But the reason you measure this bar is really simple, and I want to go through this before we start getting into ideas and what's going on in the bond market. If you take a look at what's playing out here, it's pretty clear. You are unable to even get to that 50% line to test. So what did you do? You formed a doji, and then what did you do again? You formed another doji. Then what did you do? You broke out of the doji, okay? This usually has follow through. Whether or not it does, based upon the week, based upon GDP, PCE, I can put all types of caveats that I want on that statement. Usually, this leads to follow through, period, end of story. When you start to see these kinds of what we refer to as high tight flags, I refer to them as high tight flags. People would say, oh, you need more bars. Well, I mean, you're splitting hairs. But when you start having wick after wick, which is rejection, and then you fill it in, you want to pay attention. What I see is constant rotation, constant. And every dip is being bought, period. And we're seeing that across a varied spectrum. And I do want to talk about this before I even go any further. Let's drop this down and look at this on a 5-minute chart, just so we can understand exactly how this played out today. And now really what we're going to focus on are just a couple key things here. Number one, let's just go to that 930 level for a second, okay? And let's just look at what transpired all day long until you got to about 4. Then they sold down the ES. I just put a VWAP there. But just so you can see how we did all day long and what happened. Now, right around that 1130 level, you had a bond auction. And since then, it really didn't do much. Now, you had the 1 o'clock bond auction, and we expected something out of it, sold the market down. But then we just turned around right and rallied. And that was pretty important today, considering what we had going on out there with some bond auctions. And the 10-year hardly moved. Now, what we are seeing is we are seeing the VIX start to creep up. And I think we'd be remiss in not stating that. Let's go look at this on an hourly before we get into it. Kind of bonking all around in here, but 13 seems to be, resistance, which is kind of funny when you really think about it and look at where we've come from in such a short period of time. That's definitely something that we have to pay attention to and just see, are we going to get any lift out of the VIX? And right now the answer is obviously no. So you have an ES that's breaking out. You have a dollar that's absolutely imploding. We can all see this bear flag being formed. And now we have the Nasdaq. Now, we take a look at the Nasdaq, and let's pull this back and really zoom out here and look at that level. And now look at where we are on the futures market. Let's go look at the Qs and see where we're at. Now, if we take a look at the Qs and you look at this level right here, and you get a 408 with a 407 close, and you just drop a line to it, very clear, you can see you closed at all-time highs. It's kind of funny because I actually did say that we'd be hitting all-time highs this year, but I really didn't think it was possible after we came down here in November until Powell kind of threw magic on us for the past 6 weeks. And that's exactly really what's happened here. But you're seeing that push. And what we're seeing is we're seeing constant rotation. And we should talk about this for a second. Now, I'm going to go to this sector chart. A lot of people are familiar with it. I'll just drop it in. Anyone can create one of these. But let me clean this off real quick. So what this is going to show us is varied sectors and how those sectors are performing right now. And what I'm going to do is just show you 23, so you can see 2023 and see what sectors are performing. And you see the SOXX, IGV, and the Qs and where they're at from 23. It's not exact. I can go back just a little bit more and you'll see it. But if you're looking at where we're at, you're seeing how this is playing out, post-market, obviously, XLC, XLY. But what this does is it helps us drill into things. So when I go to like an hourly chart, and let me just drop this in on the Qs, and make that a line. But when we drop this down and go from November 1st on, which is when we started really seeing interest in the rates change, and you see the SOXX XBI in the cloud and that outperformance, I couldn't show this better if I really wanted to, because the SOXX XBI in the cloud, they're just rotating. If you spend your day looking at it, you'll see where cloud stocks will go up, and then the SOXX stocks will come down, and then they rotate through them, and every once in a while, biotechs will kick in. IGV is your Dell, your IBM, those kinds of names, and REITs have obviously been doing exceptionally well in this period of time, probably the best time they've had in probably at least 2 years, and XME, XLK, and then the Qs. So all it is rotation throughout these sectors. And that's really what we're seeing. One of the exercises that we did today was just take the SOXX. Actually, from this point on, what I'll do is drill out on the SOXX. And I do appreciate everybody telling me that about the editing and just get to it, get to the material so we can learn. It makes me be able to get so much out so much faster. You have no idea. So what we're going to do is drop this to the 18th. And this was one of the things we were discussing in the room today. And I thought this was really important. So we're just going to spend a minute on it. When you come out of the gate, and you can just start seeing what's happening here and how they're playing with one another. And you can just see cloud is clearly outperforming. And when you start to see that, you want to pay attention to it. Now, why is that important? Well, if you take a look here and you look at the low, we hardly broke the low here on cloud. So that means that cloud was going to be stronger when you started to pull back. And you can see the break here and then how long it took to even get back to that lower low versus here with cloud. It just shows you which names are stronger. It's a really easy way to demark where you should be putting in your, your energy, or you're putting in, quote, your chips. It just makes your life so much cleaner to look at the world that way. Now, if you're always curious about, well, what else is moving, look at XLC. And I do this all day long, and it helps me determine where to put capital. So for example, if you're coming out of the rip today and you see how you're acting, well, what's pulling back? Well, from that opening price, cloud's pulling back, SOXX is pulling back. So if you knew that XLC, and you see, if you look at this at the end of the day, you're going to say, well, they were in line. Were they? Yeah, they were by the end of the day, but what stayed higher for longer? Well, once you can pull something like that out, this is a really good teachable moment. So then you could basically go XLC and then go, okay, well, out of XLC, clean this off, you could really just go, what names are in the XLC? This is a really good thing to learn. So let's just do it and say, okay, well, Meta's in there, and then Google's in there, Netflix is in there, Charter's in there. Okay, so they would be some of the top names, top 5 names to look at. And then if you pull this back, after you know this, you can actually have these all set up ahead of time and just saved in TradingView or whatever service you have. Just put all the holdings of XLC or whichever ones they are. I'd put them all in, just keep them separate. And then you just kind of go there and take a look and go, well, right off the rip, it's pretty obvious which ones you should be paying attention to and which ones you shouldn't. And this provided a really good trade for me today just on Google. We had an entry from before, but it really told me where to get in and get out of it just by looking at this. And you could see where the money's going very, very clearly. So not only are you finding the best sector, but then you're finding the best stocks in the best sector, right? As everybody knows, if you've been following me for some time, the way that I trade is really simple. It's index. What are the indexes doing? They're strong. Then it's sector. Okay, I found the strongest sector. What are the strongest stocks in that sector? Okay, Netflix, Google, Meta. So if you're trading and you're looking at how to deploy capital, it might make sense to be looking at those 3 names today. And usually if you see them today, that there's a pretty good chance that there might be something there tomorrow that you want to take a look at. So something to think about, a little segue there, but I think that was worth segueing. If you follow that below, just comment below that you followed that. I think it's a really easy way for people to kind of sort through things. Now, I do want to go through some individual names here, but we should talk about what's leading. Well, we already talked about it, right? Right. But is it the same names? Yes and no. It sort of is the same names, but not really. And I'll explain that. So you see the SOXX and how you're pulling back. You're rotating through the SOXX. So take a look at Lam Research. See how Lam Research was hot the other day, and now you have a red day? Now you go back into AVGO, and now AVGO is pushing yet again, making another high, which is just really incredible. But then you start getting some new friends. Now you have a new friend with SMCI, how that's breaking out, setting up to fill that gap. Probably one you want to watch tomorrow. I know it's certainly one I'm going to watch now that we broke above that 318 level, which was really very difficult. 1, 2, 3, and then we finally pushed, right? First time doesn't go, second time maybe it's the charm. And I like that. I like these kinds of patterns where you have these bases out of nowhere. You break down, you have this base, you fight through the base, and then you make a decision. So it looks like they're trying to deploy capital into certain semiconductor names, and they're searching for which ones. You can see this on NVIDIA. For me, candidly, this pullback in NVIDIA after hours and into the close, frankly, I found it suspect. I mean, that is one heck of a close. If you look at this close right here at 577, I think I have one. That doesn't even count. You have one right here that's higher. I don't even think we have another one that actually is higher than that. I'm pretty sure that is the second highest close ever on NVIDIA. And when you're seeing these rallies up, pullbacks, rally up, going into the end of the year, I don't know who your seller is going to be, because the majority of people are not going to want to lock in that capital gains. This was a monster capital gains for somebody this year, like absolute monster move. We might as well measure it off. If you just take January here and you come up, this is where they're at on the year. Do you really feel like paying taxes on that? A lot of people do not feel like paying taxes on 238% if they could carry it for a couple weeks and just marry puts to it, right? So that's just going to put pressure on the market makers, candidly. So I just don't really see who's going to go, you know what I need to do? I really need to lock in that capital gains and make sure I pay my taxes on it this year. I don't see things working out that way. And I do want to talk about that. I think you're going to see a lot of that. And maybe we're starting to see some of that on Meta. Usually you see these guys start to build some kind of short position across the board going into this. And because people know what's going to happen the first 5 days, there's usually selling. But you're just not seeing that. Even look at Google today and the way Google moved. So you had some massive, massive moves today, and I think that's going to continue. Look at this Rivian we talked about. I'd watch Saturday's video, guys. We went through a lot on Saturday's video. I'm going to link it at the end, but this is setting up to break out. This is a very different looking chart than the guys that were trading Tesla today can attest to. In the room, they actually created their own Tesla room, which I find humorous, but they do really well in there. They just trade Tesla all day. But look at this break and rejection. I mean, that's the epitome of Matumbo right there. Like if Matumbo had a bar, that would be the Matumbo bar, where you're literally breaking out, just reversing into a shooting star. You're just smashing everybody's hopes and dreams. So I would watch this as well. And we're spending a little time on the individual names because I think there's a lot to pay attention to. For example, you look at Affirm, the fact that you rallied on an outright get out of the stock, sell, is really very interesting. And I would not sleep on this. Usually you have people that are short and then they hold it overnight and then their hopes and dreams are smashed the next day. So you probably want to see if you're just going to flip that. That might be one to watch overnight. It's certainly one that I'm going to want to watch overnight. And I think that's definitely worth paying attention to. But it doesn't really matter, guys. All these solar names as well we should go over. Look at this SEDG. Downgrade Goldman, doesn't even care, completely shrugged it off. I did find this interesting with ZIM, how we saw this big push and you're already getting the reversal. And I did want to mention that you're going to want to be careful there. There are just a bunch of names I really wanted to go over that really stuck out to me. And that was one of them that I'd be really careful of. S looks amazing. Anything that is related in that space is just on fire. You can see how it held here and how we're pushing. And I just think that you really want to focus on software. It's one of the things I really hammered in Saturday's video. I just don't see the cracks. I mean, this gets completely breached and all of a sudden, what are we down? 1.7%, we're hardly down. On a side note, I saw Fetterman come out and say that they are going to fight this tooth and nail, this merger on X, United Steel. So United Steel was offered to be purchased at 55. You have to realize, guys, let's just call it what it is. You're going into an election year. I can't think of anything better than, we're going to keep the U.S. companies as a pitch going into this. So I do think it gets done in some format, but I would be really careful here. I would be really, really careful here. That you might see some volatility, or this could turn into one of those kinds of ATVI situations, as you're aware of if you played this, how long this took, how many years this battle went on for. Let me just blow it up. And I think that's why you're going to start seeing maybe, now it's not Microsoft that's buying it, but there are some waves here that could be made for X, the way that this is going to be done. And if Fetterman's coming out and saying that, I don't think that's a coincidence. I'm not going to put on the tinfoil hat, but it usually means to me, this is a good bully pulpit. Let's get up there and talk about U.S. companies and employees. I'll leave it at that. But I do think that there's some downside risk to that. Just caveat, I bought puts today. They were so cheap, I just bought outright puts on it, just in case there's some kind of really big downside move. You always get a second chance on these guys anyway. There's always something that hits. The other day we bought Macy's at like 18, 16, just because somebody had to get out. Now, one of the trades we did today, and I'm not going to walk through it tonight for time's sake, but if you want to see what we did, I will show you what we did, and I'll show you how we did it. But what I was watching very closely today, I can show it in tomorrow's video. If you comment below if you want to see it, the live trade, and I'll show it. But if you see how this acted today, all we were watching was this level right in here. And it was pretty clear that as soon as you flip this level that you were going to go. And there were a lot of signs of that where you keep bumping your head, right? If you're not going to door long enough, eventually it's going to open. You just might not like what you get. And then you just have these patterns. Now, these patterns, when you see them, they're everywhere. We just talked about one. And you can see it right here again. You break out, you have a doji, okay? And then that doji makes a decision. As soon as you got over that doji and you made a decision, it was on, and we were able to put this on. We were able to do quite well with it. What got me about this was there was what I refer to as a fat finger, and I'll show you what I mean by this. And again, if you're interested in this, actually, I'm going to show this tomorrow. So you comment below on it, but I am going to show this the more I'm looking at it, because this is really important for people to get. So you're trying to break through and you're having an issue. And we talked about this in the room, and I'll show it on the live video. There was a problem up here, right? Houston, we have a problem. I'm sure you see it right now, right? 1, 2, 3, bonk, bonk, bonk. And then out of nowhere, we get this. So this could be referred to as what a fat finger. Now, what a fat finger means, let me just throw this on. Is that the R vol? Yeah, let's do it that way and then throw it into the 1. Now, what a fat finger means is that you have a seller, and that seller might have just made it, as we refer to it, the technical term is, oops, I hit the wrong button. And so if they hit the wrong button, the very first thing that they do, in other words, maybe they were supposed to sell 20 and they sold 200. It does happen. I know people don't think it does, but it does happen. And so we refer to them as fat finger trades, because who in their right mind is just going to hit the bid and drop 200 right on the market on a market order? And clearly this was not matched. Match means when you know you have a buyer on the other side, so you match the price. When you have something like this, you are not matched. You are just dumping that on the market maker. I mean, that's pretty clear what's happening, right? You rally up to the top of the control bar, what happens? You form a doji, you break that doji. So when I see something like this, I was actually long. I just sell right into them. I don't want to know. I'll figure it out later. I don't want to play games with it. We were up in the trade. We were doing well. This happens. Candidly, I was scaling out of it, so I still made money on it, but I'm not playing games. I'm not hoping and praying for this. I'll just go on to the next one. So you come across and you hit again. And that tells you right there that that's not a fat finger trade. That means somebody really wanted out of that stock, right? If they made a mistake, they're not going to make the same mistake twice, right? And that's what they did. Here again, another block of 200. So then they sell that 200, then it rips up over. They smash everyone's hopes and dreams that are short. At this point, I'm developing buying puts, and I'm holding puts, but every time it pops over, I'm trimming and reducing my exposure, and finally it works. But once you saw that break, that was really it. And I think this is really very critical, because if you take a look at that level and where that seller was, tried to get over, couldn't, and then they get it over for a little bit, and then at the end of the day, it starts to sell down again. Not really what you want to see. That's really not what you want to see there. And you certainly don't want to see where you're rejecting over and over again so many levels. So you're going to want to watch that tomorrow and see how that plays out. Two others that I would definitely watch tomorrow. This cost has just been on fire. I guess everyone started to realize they're getting a $15 special dividend, and now you just have blue skies above you, so you're going to want to pay attention to that as well. That's definitely one that you're going to want to see. CRM, after hours, they're buying someone, but we talked about this on the weekly and in the actual free newsletter. This went out, and I put this in there where just to show people, like, look, you've got a 3-bar pattern sitting here and you're flipping. Well, now you're flipping. So you're probably going to want to pay attention to this, guys. You're seeing a lot of money go into software. Now, there are two levels that we watch really closely here, and you know this if you've been watching for some time. S5TH, you're running right into this level. This is the 200-day moving average. Whenever you get up here, if you take a look, you'll see this right in here, July 28th, February. You'll note what happened on these days in the S&P. You can just go back and take a look at them. January 5th, 2022. Okay, that's how many times you've been here. It usually signals that you're getting pretty toppy. What we don't know is we don't know if you have so much change in monetary policy that it's just not going to matter. And there are times like that where this just technicals really don't matter as much because you just have so much net buying. Remember, you have $7 trillion sitting in money markets, something insane like that. Same thing right here. If you take a look at this coming straight across, if you take a look at these dates, April 21, June 20, and just go look at these dates and see how many times you've been up here and what's happened when you get up to 90 on stocks above the 50-day moving average on a percentage basis. It usually is a sign that you're going to have an issue. The issue that I'm not sure of is it going to matter right now because of how dovish we saw Powell and how much money sitting on the sidelines. I do think it matters to some extent, and I think it's one of the reasons why you're seeing people, even as stocks are trading up, people are being a little skittish. That's it.